Yo, what's going on, boys? Charlie here with another video. This video we're going to go over what positions that LSD offered this week. Liquidity, supply and demand is my strategy. That's what I've been trading this entire week, and we're going to see what setups popped up. It was a very slow week. I took 2 trades, both cut them out of break even because I'll go over them and I'll show you guys, but they did end up losing after I cut out a break even. And yeah, that's pretty much it. It's a slow week, but we know market conditions will pick up. You know, we have the data for the last 10 years of these market conditions. Everyone's strategy, you know, goes through these slow periods and then goes through periods where they make a bunch of profit. I remember last year in August, our strategy made, I mean, it's different for everyone, but it made probably 20 to 30%, I would say. And, you know, there's big creators online that for August, it was actually their worst month. Like they closed the month red. It was horrible for them, and it was good for us. It's the exact same thing for, you know, it could be February, right? It's kind of dry for us, but for other strategies, you know, it might be good, you know, might be dry for them as well. It's always changing for every single strategy. You know, nothing's gonna just give you great market conditions throughout the entirety of the year. On top of that, NQ hasn't really been trending really hard since the start of the year, right? We had a continuation up and then a massive correction in the market, massive correction within gold. And right now, I would say recently we've been just kind of consolidating, figuring out where we want to head to for the continuation of the year. And I think that's why these markets haven't given us a lot of opportunity. On top of that, the JPY pairs, JPY, there's a government intervention going on right now, so those pairs are really risky to trade. I know a lot of people did switch from Forex to strictly futures, which that's 100% understandable. I don't see the point in that. We know these JPY pairs perform just as good as our Forex or as our futures pairs, just about, right? Maybe a little bit less trades, but you know, when you're trading a couple JPY pairs or a couple Forex pairs, they do perform good. And yes, you have to be more picky with your setups, and yes, you have to understand, you know, fundamentals with that as well about these currencies and how they work. But if you're able to navigate throughout those, and stay patient through these slow times like this, then you're able to capitalize when market conditions actually come around. So we're gonna pull up the have it on a Google Doc of all the trades that happened this week. I'm gonna go through one by one. I'm not gonna go on a super deep understanding. I'm doing that within a Discord I'm working on, but I will, you know, give you guys a rough understanding of pretty much all the setups, why I took them, why I skipped them, and all that. So yeah, let's just get into it. All right, guys, here we are. So there was actually really only 4 trading days this week. Monday was a bank holiday. I don't personally trade. Some people do, and they usually get hit with losses all the time, so I don't really know why they do. I couldn't tell you, but these 2 lost. I'll go over those, but realistically for me, and I think for a lot of people, it was just a 4-day trading week. It was just Tuesday to Friday. So let's hop in and see. I'm gonna go over the first trade that I actually took today. Now, not a lot of people took this position, and there's reasoning behind this with this exact low right here. This is a very important low. I don't want to say, but you know, it might be a session low of some sort, right? And we know sometimes when we sweep these session lows like this, it can be a manipulation or it can be a continuation, right? And our job is to figure that out. So yes, there's a demand zone here. Now within my data, I found anything over 9 hours doesn't perform as good, right? Now there's only a handful of trades that demand zones are over 9 hours old. So you don't really have much to base it off of, right? It's more of market conditions rather than just, oh, the demand zone's this old, so it's not gonna play out. It's not really the case. It's more of actual market conditions, right? And what's going on within the market. I saw this sweep of liquidity, right? And this level of liquidity getting swept too. Now there's a couple things to go over. Within this move down, there's multiple demand zones. There's demand here, demand here, demand here, demand here, all of these demand zones, okay? So yeah, it's very hard to pinpoint exactly what demand zone is gonna react from. 9 chances out of 10, we're just gonna continue giving fake outs and continue down, just like right here. If you would have taken this demand zone, right here, this reaction, lost, right? You have to understand these things. I understand these things, right? So this is a very important low If you guys see kind of the timing, I'm trying to give you guys a hint. If you see the timing, that's a very important low. There's a very important low right there, okay? Price came down hard and gave an initial reaction. Now, do we know if this is a manipulation or a continuation yet? Not necessarily. Did we close below this? We did, but we're only on the 5-minute time frame, right? So obviously, you know, a lot of candles are going to close below. When you go to something like the 15-minute time frame, when this was currently rejecting, this wick was the whole way up here. Okay, so this was never yet closed below, right? We took that low, we took these internal lows as well. We're reacting from a demand. We had we were taking out highs right here, right? Overall, well, there's a lot to go over overall. I don't want to leak too much, but bearish overall on a higher time frame, right? I was looking to capitalize on this potential liquidity sweep and a quick move up before continuation down, right? That is why not every trade is 1-to-4 quality. I got in this trade looking for a potential move up, sweeping these lows right here and these lows, right? And I knew that it's not smart to hold for a 1-to-4 up here and you know, target all these new highs, because on a higher time frame, on the 4-hour time frame, the hourly time frame, we're bearish, right? I'm expecting more bearish price action. So you have to keep these things in mind. So what did I do? I entered this trade with the intent of, I'll show you guys right here because I have my prop firm up. I'll show you guys that I got out of break even. With the intent to try to see a quick, like, snappy move after taking this liquidity and a quick reaction up, right? That's the intent of this trade. Now, people will tell you sometimes to get into a trade and be like, cool, you entered the trade, stop loss or take profit. I agree with that to a certain extent, okay? Not realistically. Sometimes there's trades that say price is coming down and you know, there's nowhere for it to react from except taking your stop loss low. And you can clearly see that on the chart, and you subconsciously know that. I know a lot of you guys watching this video, you probably were in trades before where you're like, this is 100% going to my stop loss. I can see it. You guys are like, oh, well, you know, I'll just try to stay disciplined. And it just goes to your stop loss. I don't understand why you don't just take advantage of that and just get out of the trade when you know that's going to happen. I don't understand that. I get for certain points, if you're in a trade and yeah, we had our initial reaction and you know, you're up here floating and take profit and we're consolidating, you know, some people can get, I guess, freaked out and be like, oh, I'm going to get out. That don't make sense to me, right? When you're floating in profit and you know, markets are just doing its thing, that don't make sense to me. But if a trade is obviously failing and that's your point telling you that this trade is failing, it's going to reverse, I don't know why you don't take advantage of that, because let me explain to this trade. This whole concept of this trade was to take out these lows right here and get a quick snappy rejection. I entered this trade right here. This next candle didn't give me that rejection, didn't really have that, or didn't give me that bullish move up, you know, more of a rejection. It just didn't have volume. I was watching this candle live, guys. It was barely even moving. So it's like, cool. All this was just a reaction off this demand. This isn't a real, you know, massive on a higher time frame, a big liquidity sweep for a move up and then potentially a higher time frame to kick in and continue down, right? We're not getting that. We're not getting that big move up like I wanted to see. So with low volume, it was just purely obvious. I was like, cool, not seeing the volume I want. I'll just get out. That's what I did. I'll show you guys right here. Barely even took any trades this month. 2 break-even trades. Gosh, hopefully you guys can see it. But right here, computer's a little dusty, but right there, break even, or you could say $18. Pretty much break even. So, try to plug that MacBook back in. Yeah, that was that trade, and that's why I got out of that one. Didn't see the reaction I wanted, and it was just kind of obvious for me. You know, I wanted to see if NAS was going to give a nice reaction after taking this low and this low, right? We came down super hard, 15-minute, right? The wick was the whole way up here. It was looking really good. It's like, cool, enter this position, see if we can get that continuation up. This candle right here died in volume, and I was like, cool, what we're looking for within this trade is not here, so why would I hold this trade? I got out, right? It's very simple to me. And then what we do, we just continue down, which I figured we would, right? So that's the whole understanding of that trade. Very simple trade, and it's Friday too. Fundamentals also, if you go to trade save at this time, We'll see if it's still the exact same, but this time NAS also was, yeah, same. So this is what it was looking at when I entered this trade, which was also it's kind of, you know, more or less bearish rather than bullish. So I use this as, you know, secondary confluence, right? And again, you're entering that trade because you want to expect a, you know, quick snappy liquidity sweep. If we don't get that volume, if that volume dies off, there's no point in holding. Okay, I'm not going to be that guy that enters this position. Okay, I want to see this certain thing happen. Well, I don't see it happen, so you can just clearly get out of your position and call it quits for the day, and don't take a loss instead of holding. I don't know why some of these people hold. So that was that trade. I quickly wanted to go over that. That was today. That was on Friday. So managed that one amazing as well. And we're gonna go over gold's position. The day isn't done yet. It's only 8:40 a.m. I don't stop until 10 a.m. You know, we still have potential demand down here, but I doubt we'll actually come down to it. So let's look at this. So this trade right here, a couple different things. I went over this, you know, on a deeper level in my Discord, but this candle was a 4-hour candle. A lot of times they make upper and bottom wicks. After looking back on gold, sometimes they do, they'll just make a 4-hour candle and they're just running one direction heavily. And I don't know why that is. I noticed that a lot with gold and NAS. I'm not too sure why that is. Just, I guess, very volatile, I guess. Rather than, you know, these Forex pairs, they're putting a lot more upper and bottom wicks in on these, you know, when these bigger candles open up. But this 4-hour candle opened up. You could have gotten break of candle here, which I know some people got break of candle. Or I personally saw that and it was right here, and I was like, we could so easily just put in a 4-hour bottom wick right here. I'm not taking that as risk. You know, that makes no sense to me to take that as risk. When price is just right here, it's different if a break of candle entry was, you know, the whole way up here and this was about to close with no bottom wick, right? But 4-hour just opened and it just started getting a little bit of bullish price action without putting in that bottom wick and people was entering. That was kind of surprising to me, but whatever. And your stop loss would have been down here. Now, me personally, I waited for this candle close. I wanted to play it a lot more safe. Waited for that candle close, stop loss right here. And I knew on a higher time frame we were bearish, okay? Right? You guys can see it. We were bearish. There's no reason to be shooting for these highs or anything. There realistically isn't. You're trying to catch this move right here. So for me, what I personally kept that in mind, okay? I kept that in mind, and price came up to about, I was only targeting 1 to 3 on this, which would have been about right there, right? Price came up to just about a 1 to 2. Started losing volume, right? And I saw this and I looked and I was like, cool. This is something I go over on my Discord, but when price is retracing, you can really know where price is actually gonna target based off just liquidity levels, right? When price is retracing like this, where's our targets? Well, you have liquidity right here. This is our pretty much our last hold if we're gonna continue bullish before it goes to our stop loss. That's realistically all it is. So I sat here, watched price take out this low right here. Price swept that low. Internally, we failed to push higher, and I was watching this in the 1 minute time frame. We were failing to push higher. You just see it on the candles. We kept trying to push up, kept getting rejected, kept trying to push up, kept getting rejected over and over and over again. And I was like, cool, you know, if we're gonna sweep this low, we would sweep it and you know, run up with it. Well, we're not, right? So I'll take that as cool. We're not taking this as liquidity to continue up. We're probably gonna target this low. I'll just get out of break even. And that's exactly what happened. Just cut out a break even and price started consolidating and then just ended up going straight to stop loss. So, you know, that's just purely taking advantage of your situation. And that's something I've been doing rather than, you know, I always got taught no matter what, if you're in the position, just hold your take profit or hold your stop loss. I don't really agree with that. I really don't, you know. If there's an actual reason to hold to your take profit or your stop loss, then there's a reason, right? But trades like this, when it, you know, we're overall bullish, we know price is coming down to continue the higher time frame trend. If we want to continue bullish, This is our last step to maybe potentially sweep this liquidity and continue up if it wanted to, okay? Just like how it did here, sweep this liquidity and continue up, right? If we wanted to, we would come down, sweep this liquidity to continue up, but we didn't do that. We failed on a lower time frame. We were failing to displace higher, and again, price was just falling, so I took that into consideration. I was like, cool, I'll get out of break even. And I'm sure you guys just saw that on the screen I showed you. On the 20th, which was today, was the NAS trade, and then on the 17th, which was this day, it was on Tuesday, got out of break even. So I know some people took to me, I feel like that was a really risky entry, I'm not gonna lie to you, especially price being in a bearish trend. We're not even bullish, and you know, 4 hour, no wick, we're not even bullish, we're bearish on a higher time frame, and you're entering with really like no confirmation. I could not do that. I think that's really risky, but this is one of those trades that did end up actually playing out. Luckily, if you would have gotten that entry, me personally, I just went to candle close. And yeah, you could have also, you know, sat here and understood that, hey, shooting for 1 to 3s might not be the smartest because we know overall we're bearish, right? You could have lowered it down to 1 to 2, 100% you could have, right? So that's that trade. That's literally the only 2 trades that I took this week. The rest I skipped and they were all losses. It's just crazy how slow market conditions are right now. And these JPY pairs are really kind of untradeable. There's nothing that's been even happening on the 30-minute time frame. It's just a lot of consolidation. But we know eventually we'll push through these. And January and February, honestly, statistically, just isn't that great for a strategy, to be honest. It doesn't perform great some years we get some good months in January and February, but statistically, not the greatest. So that is that, and that is purely just understanding how I could pick this apart on a lot deeper level, but that's all I'm gonna say on YouTube. But that is why I just took advantage of my situation, got out of break even instead of holding for a loss. I don't really understand why some people are trying to come to terms with that. I think they're just avoiding the fact that they need to understand market on a deeper level and understand when to actually get out of break even, or when to hold to your take profit or hold to your stop loss. I think it's just cope. It's literally just cope. That's my opinion though. But let's start off on Germany 30 Monday. This is why I don't trade bank holidays, because everything loses, I swear. Tuesday, Monday. I have no clue where this position is. 30-minute, Germany 30, Monday. Oh, is it this one? Oh yeah, okay, gosh, I'm retarded. All right. Let's talk about this one. So this would have been an accuracy zone. This wick down here would have came up to this. Since this wick is lower than this previous wick, this would be an accuracy zone. Right here I have a level of liquidity, not bad level of liquidity. I do kind of like consolidation levels of liquidity, because there's a lot more buy stops generated above those highs rather than just a quick candle retracement. So that was nice. 30-minute, we're usually targeting lows for structure trades, so you'd be targeting down here, continue lower. And let's just look on a higher time frame of what we're doing. Hint right here, you guys know what that is? That's all I'm gonna show. And using stupid stuff like that, it literally just saves you from positions. You understand we're bullish overall. We're getting a clear rejection from a key level on a higher time frame, and that's it. Like, why would you be shorting here? There's people that took this position and it lost. Again, because they're trapped in this right here. This is what they see. This bearish movement right here, and zoomed in, this looks like an amazing A+ setup, but realistically it's not, because you just had a rejection from a higher time frame key level. So if you would have taken this trade, you would have lost. I personally skipped this one. Plus it was Monday, bank holiday. Why is this on Tuesday, bro? Wait. Oh shit. Okay. This is a Tuesday position that I still skipped. I thought this was on Monday. So apparently there's a setup on Monday too. I can't find this setup. I don't know what I was on, bro. Okay, Tuesday there's a setup. Monday, Germany 30. I should have put the time. Bear with me here. Oh, okay. I see it. Accuracy zone right here. This demand with this level of liquidity, price came down. Again. Oh gosh. I could pick this apart, but I don't want to put all of this like on YouTube because this is like, it truly takes a while to learn this, but like, guys, right here we're bearish, okay? We're targeting something on a higher time frame, okay? That's where we're retracing to in a higher time frame. So why would you be longing this, right? As we're internally bearish to target this. And then right here, after we targeted that area, why would you be shorting? Because we just targeted our area that this whole downwards move was intended to target. So yeah, I mean, that's kind of an easy one for me to skip. If you would have took a long right here. And again, getting caught up right here, other people teaching liquidity, supply and demand, they'd be like, oh, we just took these highs right here. We just, gosh, I can't. We just closed above this last high right here. Nice level of liquidity, beautiful trade, and it lost. Why? Because they don't understand market structure on a deeper level. So liquidity, supply and demand is going to throw non-stop trades at you, and you're going to get drilled and drilled and drilled. And that's where the whole thing comes in with people being like, this strategy doesn't work. Then go to a new strategy and you'll see the exact same thing exist. Any strategy you trade, their entry model is going to be thrown at you almost every single day. It's your job to decipher which trades not to take and which trades to actually take and capitalize on them. No matter what strategy you trade. Again, I always talk about this. There's literally a dude. He's a bigger name too. He trades 8 a.m. to 8:15 a.m. breakouts. Okay, breakout and retest. When price breaks out to a certain level after New York open and it retest, okay, he'll take a position. That's all he does. If it was that simple, everyone would be making money. He knows literally every single thing about this entry model that you can even fathom. And sometimes there's even trades that are valid, and people, in his comments are like, yo, why didn't you take that position this morning? And he's like, well, honestly, after trading this entry model for so long, you get a level of intuition. And he was like, I just didn't like the setup, I just skipped it, and I ended up losing. It's not about, if it was all mechanical, following, a certain set of rules, then everyone would be profitable. There's a 1 to 2% of people who are actually profitable in this, in trading, and that's why. That's literally why. There's a lot of outside factors that go just into an entry model, right? That guy trading those breakout and retest are looking at a dozen different things rather than just the entry model. What's the volume on the breakout? How fast did we retrace down to the zone? I don't really know because I don't trade the strategy, but I'm sure he's looking at a bunch of different things, just like how I'm looking at a bunch of different things trading liquidity, supply, and demand. And it's not taught anywhere. That's hopefully what I'm able to teach you guys that I'm working on. And I nothing's like public yet, but it's this type of stuff. And I start to realize, because I was looking into other strategies, I was looking around at other strategies, and I realized the only reason people's complaining about this is because we don't have anyone teaching it correctly. We have people telling you that this is the entry model, and anytime you see this, take this trade. No one's teaching it on a deeper level, and that's literally what we're lacking. We only have literal 3 people in the space even teaching this strategy. That's like big, and what I mean by big is they're really not that big, 15,000 subscribers, if that, around that area. That's it. So obviously people's gonna be struggling with this strategy when there's no good people that's actually teaching it. Now the people that, sure you guys know RD, like, made the strategy, look how many trades he's been taking in the last 2 months. I think last week was his 3rd 5-minute trade he took. Now, granted, he started trading halfway through January, okay? So he's only been trading a month. But it was his third 5-minute trade he took. Because he knows how to use this strategy, right? He's literally been trading it the longest, right? And so you guys can see that, but that's just me getting sidetracked. Germany 30, that was that position. GJ 5-minute short, we'll go over that real quick. This was 5-minute short. 7 a.m. on Monday. Bro, what? I think I meant a long position. I definitely meant a long position. I must have, because right here's the position, I think. There's this position, this level of liquidity. Yeah, it was definitely a long position, that's my bad. This level of liquidity, this is kind of obvious. For me personally, liquidity's mid, not bad, but for this big of structure, we're gonna be targeting something that in my opinion, a lot more important, which would, be lower lows, and that's essentially what we did. And then internally, if we would have swept liquidity and then got a reaction, that's something different. But we swept our liquidity, we got our bullish reaction, and then we came down, and then we got a tiny little bullish reaction. And then what was that for? Just a continuation down. So I don't really know where you take this position. On top of that, again, this was a bank holiday, so this is why I don't trade bank holidays. It just throws non-stop stupid positions. There's no volume, nothing really has a valid reaction, and that's pretty much it. So it's those two positions. Oil 425 Tuesday morning. 425 Tuesday. Hold on. Where are we at? There we go. All right. Let's understand where we're at in the market. Okay. There's something with these lows and these lows I talk about. You can really tell if, we're going to displace lower, where it's actually going to be a continuation up, like how this market structure is showing you on higher time frames. So you can use that to your 5-minute time frame advantage. So I expected bullish movement. Now internally, of course, we're super overextended. So obviously we're going to retrace. Where are we retracing to? Well, look at this. Just a simple order block, simple demand zone, whatever you want to call it. So just take that into consideration. So internally, we're reacting right off that. Why would you be taking shorts when we're reacting off that? Why the hell? Oh shit. Not gonna lie to you boys, I think I just fucked up. Damn, I swear there's a position there. Yo, maybe I drew that. I must have drew that zone wrong. Well, there you go, guys. If there was a position there, still would have ended up losing. Damn. I don't know how the hell I got the zone drawn the whole way down there, but well, screw it. That's little sauce for you boys. Retracement. There's an hourly demand. I expected price to move from, and it actually did continue up. That's crazy because I swear there's a position here. 425. Yeah, that's it. Damn. Yeah, that's my bad. Shit. Okay, so there was not a trade there. So I only skipped 1, 2, 3, 4, 5 losses, and then if we're including these gold and NAS that I got out of break even, that would be 7 potential losses for the week. That's crazy. It's crazy. So these 3 I went over already. Gold I went over already. We just have these 2 to go over, and then I already showed you guys NAS. So gold, 7 a.m. 5-minute short on Wednesday. So let's go over that. a lot of people took this position here. Pretty obvious for me, using higher time frames. We had I'll just show you guys. Get a higher time frame real quick. Where are we at? It was this Wednesday, okay. So, higher time frame, okay, on the, you guys are gonna go crazy when I tell you this, but sometimes I'll literally use the daily, okay, to find where price wants to chase towards. That's all I'm gonna say, okay? And it sounds crazy, but the thing is it realistically works, right? And it's not that the daily I think is gonna be bullish, so I can't take a 5-minute short, no, but use the daily and then drop down to the hourly and then drop down to the 5-minute and get, understand, do literally what they call a top-down analysis from a higher time frame down pinpointed to your 5-minute time frame to understand where price wants to go. So all I'm gonna say is I expected price to be bullish within this area here. I expected price to be bullish, okay? And with this and this high, there's some stuff resting above these highs that has not been taken yet, if you guys understand what I'm saying. So that is that. Liquidity, great liquidity. I can't say anything about the liquidity. Nice accumulation here, nice orders here, right? And yeah, price came up really, really strong, looked great, right? Nice rejection. Shorts on gold is risky as is. On top of that, not being A+, you would have entered right here, your short position. Targeting your strict 1 to 4s wouldn't have hit. 1 to 3s wouldn't have hit either. And this, I feel like more people took break of candle rather than actual candle close, but I could be 100% wrong. I don't know what anyone actually took, but that would be your first initial like valid entry right there, which would be that candle close where it was just doji candle. So that'd be your first close. Now, internally looking, okay, well I have it drawn out, so I just gave you guys that, but price came up, rejected where we're rejecting to. It's models inside of models, guys. What's happening on the higher time frame also happens on the lower time frame, okay? I'm trying to think of how to word this, but internally, we have an overextension, even on the 1-minute time frame, we have an overextension, right? Price reacts from this level. If we want to continue up and blow through this level, we need to do something within this expansion right here. So what does price do? Comes down, takes out these internal lows and fills in something right here that I have drawn out. Possibly, an imbalance sitting within these. And that's exactly, and that's something you can react to. You can react to if price closes below that and just respects that, then we're gonna continue down. But you can also see that price respected that and bullish buying pressure starts coming in. So if you're in that short position, you can see that and be like, cool, why would I hold this? Because it just showed me that price took this liquidity, we ran down, and internally, well, we shouldn't even be taking the position first off, but if you did, internally, we just respected this. With a lot of bullish buying pressure coming up, where's our next level to take? Well, probably right here, which is our stop loss. That's the closest level that price is even gonna target. So you could see that, okay? And you could enter this trade knowing it's mid and being like, cool, I want to see price displace lower through this. When it doesn't do that, you can see that and be like, cool, I'm not, why would I hold for a price to hit my stop loss? So you could, get out at break even. That's essentially what I've done on NAS and gold. And that's literally it. So that trade would have lost. So, and I think actually a good bit of people took that trade. So that's my opinions on that one. Thursday, GJ 5 a.m. So let's go to that real quick. 5 a.m. I got some shit fucked up. GJ 5 a.m. 5-minute. Okay, I have a feeling it's not. Oh, okay, it wasn't actually 5 a.m. But I do remember this position. This right here, guys, I'm not gonna lie to you, it's just the liquidity. There's nothing else about this trade. Literally nothing else, realistically. Price is just trending up very well, 100%. It's literally purely liquidity. If these lows, stacked lows, had a demand like sitting like right here, right, and price came down and swept those and then reacted, that wouldn't be a bad trade. It's just that the demand's the whole way down here after liquidity sitting, you know, the whole way up here. We took that liquidity by that wick and we pushed up and failed. Right now we just have bearish candles coming down and we hit an area of demand. So like obviously we're just gonna get a reaction, right? That's all it's gonna be, is just a reaction, because it's, you know, an area of interest to fill in this overextension right here, right? So we tap into our demand, gives you false hope with this entry candle right here in that stop loss placement, right? And then all it is again, we're not even following our strategy by taking an actual area of liquidity and reacting from it. Our liquidity sitting up here. Some guy said that this was the liquidity. I wouldn't even consider that any liquidity. That's like nothing. This would have been your real liquidity. We have that wick, right? You guys can see we have that wick, and obviously we just placed lower, so we weren't going to take that liquidity and continue up. It just wasn't going to happen. So obviously when you get down to a clear demand area, you just get an initial reaction. Price pushed it up, and then we continue down. So that one would have lost if you were taking that position. I'm going very in depth with these, okay? I'm not going to do this for every week recap, but you know, this is stuff that I talk about within a Discord I'm making, and that's why. It's because it's like, you know, I just don't know why it's not taught. Trading liquidity, supply and demand. I really don't know why it's not taught. I mean, just simple breakdown, technical analysis of what's going on, like purely like this trade. People can say like liquidity is a bit too far, but they can never really give you a reasoning why a trade wins and why an actual trade loses. Like pretty much I just did, right? And you know, something with this and something with this high I talk about can also tell you if this is going to be a manipulation move or a displacement higher move. It's crazy. It's literally crazy. You start to realize how algorithmically made these markets are. But that's it for this week, guys. Completely transparent. I literally showed you guys my prop firm, and yeah, there's like no trades. It sucks, but it is what it is. There's actually gold trade in February that I tried to place on Top Step until they banned gold. So that was great, because I would have passed, you know, accounts on Top Step. But again, I think I said that before in another video, so whatever. But yeah, that's pretty much it for this one, guys. I have videos actually scheduled for next week where I straight up go on I go on NQ in 2022 and I spin a wheel of random months, all 12 months. I spin a wheel, and whatever month it lands on, I will literally go to that month and candle by candlestick back test the month and narrate the entire thing. And I skipped like 6 losses in November, took like 1 or 2 positions, right? Ended in, I think it was like 4 or 8%. And yeah, and I'm doing that for a bunch of other months just to show you guys that like this strategy works, but also showing you how many losses you can skip, because again, that normal LSD, liquidity, supply and demand, that entry model will be thrown at you almost daily. So you have to understand when to skip it and when to take it. It's like that with every single strategy, guys. Again, going back to the guy trading breakouts, there's going to be a breakout retest thrown at you every single day. Your job is to understand which ones to take and which ones not to take, and where to extend your TPs and when to, you know, maybe take shorter scalps and only target maybe 1 to 2s. None of this stuff's taught. None of this stuff's taught. This is stuff I'm working on. That, you know, I dropped a lot of sauce in this YouTube video, so hopefully, you know, maybe some of you guys will start looking into this stuff yourself. But again, I'm currently working on something that I think is going to, you know, change a lot of this model. I think it's going to open a lot of people's eyes, but I'm trying to perfect everything. So, you know, that'll only come out in probably 2 or 3 months or so. Yeah, more like 3 months. So that's what I'm expecting, but that's pretty much it for this one, boys, and I'll see you guys in the next one.